All right, so we're going to be building and learning about this notion of economic profit, right? Unfortunately, we have multiple definitions in economics, so not only are we going to have a type of profit we're used to calculating, our accounting profit, but we're going to have another type of profit called an economic profit. We'll discuss why that is and what it is in just a second. In order to define that, first we have to figure out what the difference is between explicit and implicit costs is. And before we can even get there, I have to make sure that everybody's on the same page as it relates to some of the calculations that businesses make, because every year I'm surprised that this stuff, which seems to be common sense to me, is not. So let's go ahead and do it. So when we're talking about businesses, they have a profit that is an accounting profit, right? Where we're looking at the total revenue minus the total cost. How do we calculate our total revenue? I'm glad you asked. That's going to be our price that we're selling at times the quantity of how many we're selling. When we're talking about costs, and when we're talking about costs in the concept of accounting profit, this is going to be only our explicit costs. What the heck do I mean when I say explicit costs? Let's define it below. Explicit costs are going to be all of the out-of-pocket costs. These are all the things that you actually had to take your money or write a check or give somebody your debit or credit card for. These are actual payments. So explicit costs would be our wages, would be our rent, so on and so forth, right? Would be the materials. If we're running a coffee shop, it's going to be the beans, it's going to be the cups, it's going to be the lids, it's going to be the milk, the oat milk, it's going to be the syrups. It's going to be the electricity. So this is all in the context of accounting profit, okay? Now we have another type of profit, which is our economic profit. When we're talking about our economic profit, we are again going to be measuring it by subtracting the total costs from our total revenue. However, when we're talking about economic profit, now we're going to be looking at those same costs that we had before, the explicit costs. Now we're also going to add in these things called implicit costs. Implicit costs. What the heck are those, Dr. McCarthy? Well, we will define those and then wrap up class. How's that sound? So what is an implicit cost? An implicit cost is an opportunity cost. And specifically, it's an opportunity cost of using resources that the firm already owns. And I think my computer derped again. 1 second.